Hi, my name is Hamini Sibam. My metric number is BG231605531. So today I'm going to discuss on the abstract that we found in our article, which is our article topic is the determinant of Islamic bank performance. This paper current goal is to analyze the determinant of Islamic bank performance to address the challenge it faces. We use an extensive data set from several mediums such as by using the secondary data analysis from trusted database such as Google Scholar and Science Direct. The observed variable of these studies are the return on asset, which is ROA, is a determinant for Islamic bank performance. There are two different variables found in this study, which is independent and also dependent variables. Both variables define the effect on Islamic bank performance on how they are derived has a previous studies. The study aims to explore how banks specify financial variables such as capital, bank size, credit risk, and operating cost, and also macroeconomic variables which is GDP growth, inflation. It shows how influence the performance measured by ROA of Islamic bank. This study sample comprises a range of Islamic banks from different nations, with a particular emphasis on the year 2010 to 2020. This study significantly enhanced our understanding of the factor influencing the success of Islamic bank. Key determinants of profitability include adequate capital, bank size, effective credit risk management, and cost efficiency. Islamic banks must maintain sufficient capital to avoid losses and demonstrate financial solidarity to investors. So that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurjah Tasha binti Amno. My metric number BG231605003. Continuing with my part introduction. The objective of the introduction is to provide a comprehensive overview of Islamic banking, its principle, and its development in Malaysia. It aims to highlight the difference between Islamic and conventional banking, the historical context of Islamic banking in Malaysia, and its economic impact. The introduction sets the stage for a detailed analysis of the factors influence the performance of Islamic banks, emphasizing the sector important to grow in Malaysian financial system. Continue with a background Islamic banking. Definition from this: Islamic banking follows Sharia law, focus on mutual risk, profit sharing, equity and asset-based transactions. So, for history in the Malaysian, started in 1963 with a pilgrim management and fund boards. Bank Islam founded in 1983, rapid growth in the 1990. So government support National Sharia Advisory Council from 1997 allowed for it bank in 2004. So from the economic impact, significant role in the Malaysia economic growth. Is a difference from conventional banking, like did have an interest, no risk, no interest like riba, focus on morality and social responsibility. For this product included syuku, qad, hasna, salam, ijarah and musyarakah for that product. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. And hi, my name is Muhammad Iskandar Razlan Shahiduzman. My metric number is BG2311051. And today I will talk about the literature review part. For this part, we will talk about ROA as a dependent variable, and the independent variable will be capital, size, operating costs, credit risk, GDP growth, and inflation. And now move to the literature review from the previous studies that has been done by Samhan and Al-Khatib in 2015. Their results shows that there is not a significant but positive relationship between ROA and GDP. Moreover, there is insignificant level and negative relationship between ROA and total income to total assets and liquidity ratio. This shows that ROA has a significant positive relationship with inflation's bank size and equity ratio, while the GDP has a positive relationship but not significant with ROA. We move to the second part of literature review from previous study that is Insani and Mufli 2019. Their study results shows that return of assets ROA has a negative relationship with liquidity risk, operating costs, and inflation, but have a significant impact on Islamic bank performance in Indonesia. and move to the third study that has been done by Hazam and al. In 2021. Their result shows that for credit risk, negative relationship and insignificant with ROI has been shown. For the bank size, the negative relationship and insignificant with ROI shows. However, GDP result shows a positive relationship and insignificant with ROI. For the last literature review comparison study has been done by Samail and al. In 2018. The result shows that its quality has a significant relationship with ROA. Liquidity management also has a significant relationship with return of asset, and capital accuracy shows that insignificant relationship with return of asset. Thank you. That's all from my part.
The basic equation or method used to examine the relationship between dependent and independent variable is to sum up all observation data among the Islamic Bank in Malaysia. The study defined the observed variable ROA as the determinant for Islamic Bank performance. It categorized explanatory variable into bank-specific financial variable, independent variables such as capital, size, credit risk, operating costs, GDP, growth, and inflation. Independent variable to observe the effect of the independent variables on bank performance.
Hello everyone, my name is Muhammad Ahmed Sadikin. Today I'm going to talk about what affect the profitability of Islamic banks. Focusing on return on asset or ROA. This is an important way to see how well the bank is doing. We are looking at two types of factors, those specific to each bank, like how much money in the bank, how big the bank is, the risk of not getting loan paid back, and the cost of running the bank. We also look at the wider economic factor, like how the fast the economic is growing and how much price are rising. Our study used data from Islamic Bank, financial report, and economic data from all around the world to understand more. That's all, thank you. Hi everyone, it's me again. For our study, we choose about 50 Islamic bank for different country and looking at their data from 2010 to 2020. This helped us to make sure the results are strong and meaningful. We collected our information from the bank, yearly report, and other financial detail. We also use the data for bank for data from big financial database to get information on the economy health like GDP growth and inflation. To analyze the data, we started by summarizing it, simplify it, looking at the how closely different factors are related on each other, and finally use statistical method to really understand how these factors affect the bank profitability. We also took care to handle the data responsibly, keeping it confidential and using it only for this research. That's all, thank you.
Hello everyone, my name is Shani Ganesan and my metric number is BG23160535. Today I will explain about the data analysis finding and discussion regarding the determinants of Islamic bank performance. So data analysis for Islamic banks in Malaysia, the data analysis for this study uses regression analysis, correlation analysis, and descriptive statistics to identify the relationship between other variables and the dependent variable and return on asset, which is ROA. Descriptive statistic. The analysis variables descriptive statistic is the sample of Islamic banks as a mean return on asset ROA of 1.21%, which suggests that they are generally profitable in relation to their total assets. The average of capital ratio EA for Islamic bank is 13.42%. And when all assets are considered, the average bank is 21.76 billion, a credit risk ratio PL means of 2.84%. The operational cost ratio as a mean of 1.98%, which indicates that operating costs typically account for 1.98% of total asset, while the average inflation rate is 3.21%. For the study period, the average GDP growth rate is 4.87%. So next is correlation analysis. Increased capital ratios, higher bank sizes, and greater economic growth are all related to increased profitability as seen by the positive correlation between ROA and GDPGR, which is 0.34, and EA 0.32, and bank size is 0.27. Higher credit risk and operating expenses have been correlated with the lower profitability as indicated by the negative correlation between ROA and PL, which is negative 0.29 and TA is negative 0.31. There is a small but significant relationship 0.12 between ROA and inflation. Findings and discussion. The success of Islamic Bank is largely dependent on a few critical characteristics which this report highlights: enough capital, a greater bank footprint, efficient risk management, and cost effectiveness. Sustaining enough capital protects against losses and gives investor peace of mind. Larger banks are typically more successful. Reduced operation technology and resource management can all lead to cost efficiency. Bank performance is positively impacted by economic growth, highlighting the necessity of matching strategy to market trends. There is a greater demand for loans and investment during economic growth. Risk control and investment diversification are essential during the recession. The performance of Islamic banks was not significantly affected by the efficient management of inflation.
Conclusion: a wide range of internal and external factors can have an impact on Islamic bank performance. Strong performance is dependent on a number of external elements, including strong capital sufficiency, efficient management, good asset quality, efficient liquidity management, and strict adherence to Sharia rules. These internal components guarantee consumer trust, risk mitigation, and operational efficiency. The performance of an organization is greatly influenced by external factors such as favorable economic condition, regulatory backing, and technical breakthroughs that improve service delivery and create favorable operating environment. Furthermore, the market competitive dynamics and the bank dedication to ethical behavior and corporate social responsibility are significant factors that influence their performance collectively. These factors helps banks maintain their unique value proposition in the financial sector while navigating obstacles, seizing opportunities, and achieving sustained development and stability. Thank you.